Okay, so good afternoon, everybody. I'd like to welcome you all to Inclusiv's Black History Month Black History Month webinar for 2024. The topic is Advancing Economic Opportunity for Black Communities in the Deep South. We have a packed agenda today, and I think you'll really enjoy the conversation we're going to have. We have really rich representation from an organization called Hope Policy Institute, and then also a credit union in the South based in Birmingham, 6th Avenue Baptist. Just to tell you a little bit about how the flow will go for the session, we have an hour together, and I'll do quick introductions, but then I'll turn things over to Hope, two of their staff members, to share a little bit about their thinking behind the work that they do and why. And then we'll have a facilitated conversation with Michelle Days at 6th Avenue Baptist. Again, she's based in Birmingham and has been working at her credit union for many years. And then we will have time for audience Q&A. So as you're listening, you're always welcome to type in the chat or the Q&A feature. We'll see the questions come through, but we'll try to take them at the end. And then we'll have time for wrap up. So hopefully we have a good session for you, and we're so glad you signed up. I'll show you who we have in terms of speakers. We have Mr. Kiad Burt. He's the director at Hope Policy Institute. We have Courtney Thomas, Senior Policy Analyst at Hope Policy Institute, and Michelle Days, CEO of 6th Avenue Baptist. So I want to thank them all in advance for being part of today's session, and we look forward to hearing what they have to share. So I'm going to set you guys up, and I'm going to turn things over to Kiad. Kiad, are you muted?
I am here. Are we good to go, Monica?
Yep, go ahead.
All right, thank you so much, and good afternoon, everybody. As Monica just mentioned, my name is Kiad Burt, and I'm the director of Hope Policy Institute. Hope Policy Institute is the policy and advocacy arm of Hope Credit Union and Hope Enterprise Corporation, and collectively, we are a CDFI located in the Deep South states of Alabama, Arkansas, Louisiana, Mississippi, and Tennessee, with the sole mission to increase access to financial inclusion or affordable financial services and products in this region. Thanks, Monica. We have been doing this work for nearly 30 years, since 1994, and we have deployed over $3.9 billion in community economic development financing, which has impacted over 2.7 million people throughout our 5-state footprint. Next slide. The undergirding principle of our work is to mitigate the impact of factors such as race, gender, and region and in their ability to preclude people from financial inclusion. But I will say, given that it's Black History Month, it's important to know that our work and our story doesn't just begin as a financial institution or a policy institute for that matter. It really begins on the principle of Black cooperative engagement and organizing. For example, our work builds on the cooperative movements, for example, of the Black Woodcutters Cooperative here in the Black Belt and Mississippi Delta of the region, in which these men organized to pass legislation for fair wages, in which they were originally trapped in high-cost debt traps with the wood dealers. And another example, our work and our mission builds on the cooperative efforts of Tri-Rivers Credit Union, which was dedicated to increasing financial access for teachers in the city of Montgomery. And even if we were to think back even farther, the principle of cooperative development and organizing that Hope champions today stems all the way back to the Freedmen Bureau, which was constructed to provide financial services and capital to newly freed, formerly enslaved Africans coming out of the Civil War during Reconstruction. So one thing I want to ground us in as we continue our conversation is that Hope's history as a financial institution is really Black history. And so we want to understand the importance of Black-led financial institutions and the impact that we have today in our communities as we fight against rising cost of living and inflation for capital. Next slide, please. We build our work and our impact at a geographic level. Here you will see that we have 24 branches throughout our 5-state footprint. One that's not included is going to be Birmingham. But I will say that we believe in meeting our members where they are and providing services that meet their needs most honestly. To give you an example, we reflect in our membership the actual challenges that our communities face more broadly. An example would be that on any given day, 2/3 of our members have less than $1,000 in their account, and the majority of which new members were previously unbanked and underbanked prior to joining Hope. Next slide, please. So we believe in mitigating these structural factors by providing access. But to better understand the impact of our work in the region, is best to realize why this region matters. So here we have a map of the 1860 census slaveholdings, and you'll see that the highest concentration of enslaved Africans was actually along the Mississippi Delta, Mississippi River region, and the Alabama Black Belt. And what you'll see on the next slide is the same regions and communities that had high rates of enslaved populations also have the highest rates of deep poverty. You'll see in this map that shows poverty rates for the past 5 decades that the same Mississippi Delta and the same Alabama Black Belt region also have extremely high rates of poverty. In fact, over a third, just about a third of the nation's persistent poverty counties, that is, any county that has a poverty rate of at least 20% for the past 30 years, are located in our 5-state footprint. It's Alabama, Arkansas, Louisiana, Mississippi, and Tennessee. But I will tell you that the impact of these geographic challenges are stemming into the consequences of racial disparities. Say it simply, I'm going to turn it over to my colleague Courtney to talk about these racial disparities and what they mean for our work.
All right. Thanks, Kiad. If you mind, Monica, just advancing the slides. Next one. Perfect. So as Kiad mentioned, the work that we do at the Policy Institute really draws from the data and expertise that our members experience in their day-to-day lives. And so we see racial disparities across all aspects of financial inclusion. This map right here, this slide right here showcases 4 different data points which focus on our policy agenda. The first is related to unbanked and underbanked households. In case you're not aware, the median wealth of a white household is about 6 times greater than the median wealth of a Black household. And in the Deep South, we have some of the highest unbanked and underbanked rates in the country. An unbanked household means that the individuals in that household do not have any relationship with a mainstream financial institution. Whereas an underbanked household means that they do have a relationship with the institution, but they may still rely on alternative financial services, so cash checking or payday lenders. And we're seeing in both aspects, nationally and regionally, that households of color, non-white households, are more likely to be unbanked or underbanked. In the top right, we also notice the home ownership gap. So home ownership drives every aspect of wealth. We know that. Increasing the likelihood of having a home actually increases your wealth. And access to financing is uneven along Black and white households. So we found that over 3/4 of white households are homeowners, while less than half of Black households are homeowners. And again, we see disparities at every level, the national level, and then in each state within the Deep South. Access to small business capital is also a barrier for the community that we serve. We know businesses are integral to the fabric of our communities, but not every business has access to capital. And this chart, actually, this graph, shows data from the Small Business Annual Credit Survey conducted by the Federal Reserve, where they found that Black business owners were less likely, at about 20%, to be fully approved for capital, in contrast to over half of white business owners. And then we also see a prevalence of predatory lending in our neighborhoods. In 4 out of 5 of the Deep South states that we serve, all of them except for Arkansas, a payday lender can legally charge 410% or more on a single payday loan. Obviously, that's extremely high when you think your credit card interest rate is probably only about 25%. And so this is about 410%. The highest I think we see is in Mississippi with 500%. And these exorbitant fees and interest rates, they drain millions of dollars from Deep South communities, and they keep them entrapped in debt, insurmountable debt that's almost impossible to overcome. And so I'll stop there and just sharing a little bit more about what we do. And I think we can get more into some of the other questions you have.
Monica, if you're talking, I think you're on mute.
Sorry about that. Thank you for presenting those slides and providing that table setting for us about what challenges you're facing in the Deep South in particular and the southern states. But given the myriad of challenges, can you share what some of your recommendations might be? Like, what are the topics you're working on specifically at Hope Policy Institute? And then what are some of your recommendations? Like, where do you spend your time?
I'll start and say our policy concerns or the areas that we're focused on revolve around ownership, particularly access to financial inclusion or account ownership, and then home ownership and small business ownership. These have been proven to be significant drivers of wealth and viable solutions to decrease the racial wealth gap, which Courtney has just referenced. Currently sits at 6 times. So white households have 6 times the amount of wealth than Black households do. What's interesting, if we look at small business ownership, that racial wealth gap shrinks from 6 to 3 times the amount of wealth gap. So we understand that increasing access to affordable financial services and products is critical in providing more capital and more wealth to communities that have been historically locked out and marginalized from mainstream financial institutions. So those are our policy concerns: is increasing home ownership, increasing access to affordable small business capital, and increasing access to just inclusion, account ownership for that matter. But Courtney, what would you say is one of our leading recommendations for the Policy Institute?
First and foremost, we have to invest in CDFIs and minority depository institutions with strong track records of lending to people of color. So not only is the people who we serve under-resourced, but also in the CDFI industry, we see gaps in financing amongst minority-led CDFIs and white-led CDFIs. And so, for example, over the last 15 years, the median asset size of a white CDFI is nearly 3 times as high of a minority-led CDFI. And we know that Black-led, minority-led CDFIs are, critical in reaching under-resourced communities, and they are traditionally have a really strong track record of doing that. So for example, we found that among 21 CDFIs in Mississippi that were engaged in mortgage lending, only 11% of their mortgage lending went to Black borrowers and 69% of their mortgage loans went to white borrowers. But in contrast, if we look at Hope, our credit union, we made over 80% of our mortgage loans to Black borrowers. So Black-led CDFIs, minority CDFIs are really crucial in reaching these communities, but they're under-resourced. And so we need to continue to invest in them.
And the second recommendation that we have is really around creating a secondary market for CDFI mortgage products like our internal product. We call it the Affordable Housing Program product. This is a mortgage product that will increase access to affordable mortgage financing for first-time homebuyers of color. You can have a credit score as low as 580. You do not have to have private mortgage insurance. It's manually underwritten. You can come in with alternative forms of credit repayment, such as a utility bill, rent payments, or a cell phone bill. You can have student loan debt. We will use that to calculate your DTI. As long as it's in a repayment plan, we use the monthly payment and not a percentage of their overall student loan debt. And it's 100% loan to value. That means you do not have to have a down payment. It's 100% finance. Now, this product is extremely impactful. To date, we've deployed over $130 million in mortgage financing, the majority of which are to first-time home buyers, the majority of which are women, and the majority of which are people of color. What's interesting about the characteristics of this mortgage product are the GSEs, Freddie and Fannie, the federal agencies that manage home ownership in the secondary market, consider this product too risky. They consider the product unstable, if you will, to have a secondary market. So our recommendation is that they should do more to support home ownership in today's market. It's not fair to many Black communities that the same agencies that created redlining are now the same agencies that they're going to keep them locked out of home ownership in the 21st century. So our recommendation is that that secondary market, the GSEs to be exact, should do more to accommodate the home ownership opportunities for Black communities.
No, but you're raising some really fascinating points. I'm still pondering the piece that you mentioned, Courtney, where you were like, even though there is CDFI in your area, like let's say a mainstream CDFI, but they're only serving 11% of Black borrowers versus your guys' 80%. That's incredible, because we all know why CDFIs were created. And so you'd think with that in mind, that they'd be doing having deeper penetration. It kind of goes to something our consultant Terry Radigan says is like, not everybody has like as high of a financial inclusion score, like in this work, that might have the name of CDFI. To go to another question for you guys, and some questions are coming in, so I do welcome those that we can ask you guys later. But what are ways for inclusive members, the government, and or the private sector? Just what ways can those entities support this work? Or what is your call to action?
So I can start with that one. I think it's really important right now that we we uplift the Consumer Financial Protection Bureau. We're in an age right now where the CFPB has been, under attack in relation to a lot of their strong policies that they've come down on, hammering on junk fees, calling for increased like data transparency. And it's really important that we uplift the CFPB because in Deep South states, like ours with weak consumer protection laws, the CFPB is truly, one of our only advocates. And having a strong CFPB is really important in terms of setting proposed rules that will ensure that consumers are not exploited against businesses. And we've been seeing them really moving in the right direction. We've seen an increase in research. We've seen, like we said, calls for the increased data transparency in their rule of 1071, which would illuminate some of the barriers to fair lending, fair lending and access to capital that we know small businesses and Black businesses are facing. We know that they're facing this type of discrimination, and calling for that type of increased transparency is really important. And then hammering down on stronger protections, against junk fees, as well as against payday lenders. And so it's really important, I think, that we protect them and that we uplift them and really make sure that we're invested in a strong CFPB that can do their job and keep our communities safe and secure.
And I would say relatedly, as a call to action, I would remind us to lean into our mission and organize, and organize, understanding that we are in position to face pretty significant headwinds against our movement to increase services and products to the Black community. And so drawing on our history, as I talked about at the top of our presentation, among groups who have organized themselves to provide financial services when mainstream financial institutions looked at them and locked them out, we should always remember that the fight for financial freedom has always been just that, a fight. And so as we continue to think about what we should focus on and what we should be working towards, we should keep the racial wealth gap in mind. And we should also keep climate change in mind as well. Monica, if you have the capacity, can you go to slide 7 in the presentation? I just want to quickly show those who are on the call that communities of color are more likely to be burdened by climate change. And what you'll see in these two maps, these two graphics, if you will, that the projected damage of the climate change is, again, like as I showed with the 1860 map, follows the same Mississippi Delta, Alabama Black Belt band. of the Southeast. And so what you'll see is that they have higher risk, these communities of color have a higher risk of energy burdens, and they're going to be disproportionately impacted by climate change and the heat and the other devastating natural disasters that come with the region, such as tornadoes and hurricanes. And so as we think about what we could be doing with ourselves and institutions over the next 12 months or 2 years, even for that matter, we should be organizing around the developments that are going to impact our communities the most. So that's just an example. So let's get organized and let's get active. Lean on each other to support.
Sounds great. Thank you. I will turn to Michelle at this point, but just again, questions are coming in specifically for you guys, and we will bring you guys back in. But Michelle, let's have a little conversation because I love to tell people more about your credit union. So my first question to you would be, can you tell us about 6th Avenue Baptist? And is there something historically, is there anything in particular that's historically significant about your credit union? I think for context for the whole group who's listening, it's also like what we're trying to suss out is sort of like people will say things like, oh, you know, any credit union will do, or we serve everybody. And so I just want to put out there, who are you serving? And can you just tell us a little bit about your credit union?
Absolutely. And good afternoon, everyone. As Monica stated, my name is Michelle Days, and I am the CEO of 6th Avenue Baptist Federal Credit Union here in Birmingham, Alabama. I really would like to thank Inclusiv for providing this platform for me to share the rich history and legacy of 6th Avenue Baptist Church and 6th Avenue Baptist Federal Credit Union. They are tied closely together. I feel it's very important that and almost imperative that we tell our story and embrace our history so that, you know, there's a certain element that's trying to erase it or rewrite history so that everybody knows, you know, the true history of the African-American experience here in America. But 6th Avenue Baptist Federal Credit Union was the vision of Dr. John Thomas Porter, who in December 1962 was installed as the 7th pastor of 6th Avenue Baptist Church here in Birmingham. Now, Dr. Porter grew up here in the church. He was what, you know, church people call a son of the church. He was raised here in the church. But it was during his time at Alabama State University in Montgomery, Alabama, that he accepted his call to ministry. And it was there that he met and worked with Dr. Martin Luther King Jr. At the historic Dexter Avenue Baptist Church in Montgomery, Alabama. And we all know the significant role that they played in the civil rights era. In my research, I discovered that Reverend Porter gave the invocation at Dr. King's installation as pastor of Dexter Avenue in the late 1950s when he was installed as pastor of Dexter Avenue. And then in 1962, December of 1962, it was Dr. King who came to Birmingham and preached the installation sermon of Dr. Porter when he was installed as pastor of this church. Soon after Reverend Porter became pastor, work began to determine the feasibility of establishing a credit union here in Birmingham at this church. And I think it's kind of important that I give you a little background information and tell you a little bit about, you know, the civil rights history here in Birmingham for those who may not be familiar. At this time, 1962, 1963, it was the height of the civil rights era, and Birmingham, as many of you know, played a significant role in the civil rights movement. In January of 1963, you know, that's when George Wallace made his inauguration speech stating segregation now, segregation tomorrow, and segregation forever. So that was a part of the climate that, you know, our credit union was kind of fostered in. In April, many marches, sit-ins, and demonstrations occurred here in Birmingham, and it was in April of 1963 that Dr. King was arrested and jailed in Birmingham, and he penned the famous letter from a Birmingham jail. That's also a part of our rich history here. In September of 1963, we all know about the bombing at 16th Street Baptist Church, in which 4 little girls were killed while attending Sunday school. And I like to share that Dr. King preached the eulogy for 3 of the little girls who were funeralized from 6th Avenue Baptist Church. It was the old church. We currently are in a new facility that we moved in around early 1970s, but the old church was actually on 6th Avenue in downtown Birmingham. And 3 of the little girls were funeralized from that church. But moving on to the actual beginnings of the credit union. Again, it was Dr. Porter's vision to start a credit union. And while I was researching and preparing for this webinar, I contacted a few of the members that were who are actually still alive and members of the credit union. And it just made me realize 1963, that really wasn't that long ago, you know. We still have quite a few people that, you know, vividly remember the time and the environment in around that time. But the consensus was that this credit union was founded because Blacks couldn't get loans at white banks. That it was just as simple as that. They could make deposits at those institutions, but, you know, they couldn't borrow any money, you know, from the other financial institutions. And I don't think it was their mindset then, but we realize now that in essence, what that was doing was stripping resources from our community. They were taking money from our people from our community and loaning it to, you know, others in essence, you know, building their financial wealth and improving their communities while, like I said, you know, stripping it from our own communities. And I think probably in our leaders' minds, we wanted to keep those resources in our community and provide a place that, you know, our members could collectively save their money and in turn be a resource to each other in terms of loans. Over the 25 years that I've been here, I've heard countless stories of how this credit union has, you know, allowed people to send their children to college. College graduates have purchased their first car loan, you know, purchased their first car with a loan from our credit union. And so I think we've been a valuable resource to this community. We're located in what's called Titusville. It's right outside of downtown Birmingham. But over the years, we've seen a change in the community. And so there's still a lot of work to be done, but not to deviate too far from the story, in November of 1963, we received our charter from, I don't think it was NCUA at that time, but we opened with 10 members and $50 in assets. And so over the years, we currently have about 5.5 million in assets and serve close to 1,000 members. So that's our story.
Thank you, Michelle. What a great story. I mean, it's so, the history is full of, it's such a rich legacy that you guys have, that you're still here and that you're still doing the great work that you were founded to do. I have a question, a follow-up question. So what do you see taking place in your community that reflects the need for Black-owned institutions such as your credit union? So why are MDIs such as yours, you know, Black credit unions such as 6th Avenue, still relevant? Like, what are your members coming to you for? Like, what are their needs at this time? For example, do you think, like, we saw those 400% interest rates and the 500% that Hope showed us. So what are your members needing that you think that they're not getting from mainstream institutions?
And I was sitting here thinking along the same lines that Kiad and Courtney did an excellent job of explaining to us the state of our communities and as it relates to their financial opportunities and access to capital. I think our members' needs are a little bit less complicated than that, for lack of a better word, you know, to describe it. I think in our community, there's been blight. You know, there are a lot of abandoned homes. They've become food deserts. When I came here 25 years ago, there were a few chain grocery stores that were here in the area. And I can't really think of one major one that is here in the immediate area. So all of those things that impact our members' day-to-day lives are really, what's important. And I know Kiad mentioned about, electricity bills, utility bills, the high cost of living that, that really just impacts our members on a day-to-day basis on a smaller scale. And he touched on the unbanked and underbanked. So many people are using check cashing services, which again takes resources, takes money out of their households. But just basic needs, car loans, we've done a tremendous amount of car loans within the past year since post-COVID. That's really, kind of helped sustain us as well. But just really basic immediate needs. We don't really do a lot of real estate lending. We may use some equity in a person's home just to maybe do a debt consolidation and kind of help, get them on the right track. But we don't do any long-term, real estate lending. But I think one thing that I've also learned, and I don't want to keep rambling here, is that banking and managing your finances is very private to our people of our community, and sometimes it's very intimidating. We were talking about the low mortgage, completion rate, and I believe I read somewhere that a lot of African Americans start the process. They may be approved, but they don't complete it. And I believe that it's because it is it's intimidating, and it's very, it can be challenging for a lot of people. I'm also a licensed realtor here in Birmingham. And so I've seen both sides of the process. And I think that just getting from approval to close can be very challenging for a lot of our members. And I would like to think that our credit union could help fill that gap and actually getting them through completion on that process. And we'll have to explore ways in which we can help in that regard.
So that's definitely one of the challenges. Are there also some opportunities for your credit union? You're welcome to touch on any challenges you're still experiencing as an organization or opportunities.
Lack of, resources. We're a $5.5 million credit union, and we have close to 1,000 members. We have two full-time employees. I'm one of those full-time employees to service all the needs of our members. And I've been told by, our examiners, the NCUA, as well as our auditors who come in to, audit our financials, that we provide many of the services that larger credit unions provide, but we have fewer resources. So, grant funding, we just recently received CDFI certification. So we're really eager to explore, what opportunities are available to us in that regard. But yeah, just the resources to help us do our work, building our capacity to serve the needs, because it is a labor intensive job in dealing with people who really don't have a broad knowledge of finances and how to actually manage those. So you spend a lot of time educating, more so than you do with other populations, I do believe.
Mm-hmm.
So just resources, making it available, and Inclusiv has been great, a great source of information and over the past 2-3 years that we've been a part of Inclusiv.
Okay. Thank you, Michelle. Just a couple more questions for you, and then I'll open things up for the audience. But so, folks who have been chatting in the chat, but how can non-MDIs support you or your credit union? So I don't know if anybody's been helping locally. A lot of people are connected to their leagues. I was just wondering if there have been some non-MDIs that have been helpful, or just I'm thinking if somebody's listening to this webinar, they might think, oh, I'm not an MDI, I'm not a Black credit union. How can I help those who are Black credit unions and faith-based credit unions? So
I think just continuing to, share your resources. I do have some colleagues who are non-MDIs, and they have been invaluable in, it could be as small as a policy. If there's a new policy, just sharing a policy, if I'm here, doing loans or doing teller transactions, and I have a policy that I, need to get in place. Sometimes just providing your copy of your policy that I can kind of massage and make it, more reflective of our operations. But again, just a phone call if I have a question. Sometimes sharing your experience with a product or service could eliminate the curve on us getting that product or service up and running in our institution and avoid some of the pitfalls that they've encountered. But just being available, with whatever we need, questions we have or resources that you have, is always helpful.
Great, thanks, Michelle. I do have a question about whether or not you have a particularly memorable member story. I didn't know if you wanted to share one that sort of sticks out at you over the year. 25 years is an amazing career.
It's a
Like,
long
and that's just a
run.
partial, and that's only been at that credit union before, probably in banking before that.
I can't say, one in particular, sticks out, but there have been so many opportunities to just help people on a basic level. It's been rewarding, because I think we're so small. We have a little bit more flexibility. We don't do scoring. We do in-house, underwriting and decisioning on our loans, and just getting to know the people and understanding how they ended up in the financial situation that they're in, and just developing a plan for them to improve their lives. I did have one young man. He came in, he had purchased a vehicle with another lender, and of course it was at outrageous interest rates, but he didn't really have any equity. But we took a chance on him, and within a year's time, he had, improved his credit score from, maybe the mid fives to he was right above 700. So with the work that we did, we were able to get him, to that particular, credit score, which changed, his opportunities. I do have one other story. I did have a member that was pretty much in the same situation. And she came back a few years later, and she had increased her credit score, and she was, applying for another loan. And she told me that, well, I'm sorry, but she was going with another lender because their interest rate was maybe about 0.25% lower than ours. And at first I was offended because I was thinking, I helped you, and you abandoned me for 0.25%. But after I thought about it, I was glad and grateful that she had the opportunity to make some decisions, in that regard. And that we were instrumental in getting her to where she could control, her destiny, and not just accept what others, a lot of times they're just grateful that someone gives them a loan, and they'll take whatever is presented to them. But that she was fortunate enough to be able to make some decisions about her own finances and make what the choice that was best for her. So a lot of stories
story.
along those regards.
I love that story, Michelle, because it's like somebody, Aisha Nyandaro from, she's in the Mississippi area too, I think Jackson. She runs a nonprofit, and she was saying financial freedom looks different for different people. And so in that case of that woman, she's now educated and informed enough to know she's shopping, she's price checking, and it's like that, like you said, that's great in and of itself. I'd like to bring Courtney and Kiad back in. Before I kind of go into questions from the chat, there have been a lot of ones that I've seen you, Kiad, answering, but I want to go back to the origin story for the Hope Policy Institute, because I thought that was really fascinating. you had a credit union, which most of the people listening are from credit unions, but then you guys made the choice to have these other arms and branches. And so you said that there was some connection also to like natural disaster that kind of spurred the creation of Hope
Yeah, absolutely.
Policy Institute.
Yeah, absolutely. Quite directly, the Policy Institute was born out of advocacy and organizing for communities impacted by Hurricane Katrina in 2005. And so, where there was opportunity at the state level to increase access to FEMA recovery dollars, in which at the time there was some racial disparity in which certain households were not able to get certain relief from FEMA, we were able to assist in raising access to those FEMA dollars, if you will. But that's literally the origin story of the Policy Institute is that natural disasters come to the region, particularly Hurricane Katrina, and we rose to the occasion to meet the needs of our member communities to take on the policy fight to increase access to recovery dollars. I will say that Hurricane Katrina may have started the Policy Institute, if you will, but there are a number of natural disasters that will continue our work today and likely into the future. As I talked about the climate change, as you saw with the heat index, if you will. You'll also see that was the case last year and years before with the tornado in Rolling Fork. There was opportunities to assist our communities when there was an ice storm in 2021. And so just really, and it's not even complicated from a policy front, just finding ways to show up and support local communities as they recover from natural disasters is a part of our mission as well.
Great, thank you for sharing that. Just in case people are not seeing the questions, I do want to cover some of this ground. Somebody was asking you earlier what your types of delinquencies and charge-offs are. I didn't know if you wanted to share with the group, because people always say risky, this population, working with Black communities or working with LMI or persistent poverty communities are risky. So what are
Yeah.
your charge-offs like at Hope or even at 6th Avenue?
Yeah, what I would tell you is over the last 5 years, our annual net charge-off rate for our mortgage portfolio has never risen above 67 basis points. And the charge-off rate for 2022, for example, was less than 0.20%. So you see that the product is going to perform. It's just a matter of getting the GSEs to understand that what they determine to be risky is not necessarily risky in reality. It's just risky by the metrics that they have constructed. And another thing I wanted to add to this conversation around our AHP product is again, over the last 5 years, we've been able to close over nearly 600 mortgages, 596, the majority of which, as I mentioned earlier, were going to women, first-time home buyers, and people of color. Just want to give you all some actual statistics on that. 83% of those loans went to Black homeowners. 91% went to first-time home buyers and 59% were to women-headed households. So the idea is there are products that could be created to help these communities. It's just simply creating the product and marketing and getting it to the communities that need it the most.
Yeah. Michelle, did you want to add? So you came off.
Well, just traditionally, we were considered a high delinquency credit union. But post COVID, we saw a drastic decrease, in our delinquency rates. And, we've been posting delinquency around 1% or less for the past 2 or 3 years. So that's been a significant change, for us, which means less of our income is going towards, bad debt, and it's going towards providing the products and services that can really help people in our community.
Michelle, do you ever have that experience where you feel like you have to explain your membership and your decisioning to your examiners? Like, have you ever had to feel like you're educating them on who you're serving, how it's going to work?
Oh, absolutely. Oh, absolutely. For years, I've told them, you give us this charge to, serve the underserved and people helping people. But then, when we do that, when we take a chance, and we try to be as cautious and, cross all of our T's, dot all of our I's as we possibly can. But sometimes people, have unfortunate circumstances that prevent them from being able to handle their financial obligations. And I've shared with them that, for you, this may be a debt ratio or a credit score or, just a piece of paper, numbers on a piece of paper, but this is an individual to me. So it's a little bit more personal when you're dealing with the person face to face. So absolutely, we've had to have those conversations over the years.
Thank you. So a question came in on the side in the chat. It was about it came in when you were talking, Kiad and Courtney, about GSEs. So the question says, do your program for first-time home buyers include an educational piece, such as what's involved in owning a home? So, I mean, I think maybe it might just help to hear once more what you're recommending, like what is there, what is being offered, and then how do you want to change it? And is there an educational piece that's layered in, baked in?
Yeah, absolutely. So to answer the question directly, yes, we do have homeowners education a part of the mortgage closing process. In order to receive the mortgage financing, you have to go through some home buyers education. To get back to the point around a secondary market, effectively what we would like Freddie and Fannie Mac to do is to create a secondary market to purchase our AHP loan product. The way it works is the Freddie and Fannie would buy the loans from our books in some type of package or portfolio, which would give us more liquidity to increase our lending volume to the same population. Currently, that product or market doesn't exist because they will look at our portfolio, the AHP product, and say it's too risky because the credit score is too low, there's no private mortgage insurance, and there's no down payment assistance. There's no down payment from the borrower. It's 100% loan to value. Those three factors taken together, according to the GSEs, is too risky, even though the product performs. So that's what we're asking them to do, is to go into the black box of credit or the metrics of risk or credit worthiness and redefine it and create an institution and a process that's going to facilitate more Black home ownership in the United States.
Mm-hmm. So thanks for answering that. A question also came in about using any form of technology, because right now on the surface of what I'm hearing, some of it does seem a little bit more labor intensive. So at Hope, for example, do you use any form of technology to streamline the process or encourage consistency across approvals and denials? I know you answered it, but just for people to hear live. And also that kind of goes to some of the PPP story. It makes me think of that, like how you guys were able to generate so many, like what kind of automations or technology are you guys using?
Yeah, we're definitely exploring opportunities to better use technology to streamline our mortgage financing process. So from finding the home and understanding what you're eligible to, what you're qualified to what you're qualified to purchase, then going from that day to closing. We definitely are entertaining opportunities to use technology. To what extent, I'm not entirely sure at the moment, but I do understand we are employing strategies to decrease the amount of time it takes to close, and technology is definitely a part of that conversation. Relatedly, we have used technology in the past to better streamline our efforts to increase access to capital. Monica, as you mentioned, the Paycheck Protection Program was a great example. Here we were talking about $800 billion of small business capital that literally transformed and saved many communities during the pandemic when economic shutdowns were the policy mandate. I will tell you that in that time, we had access to employees, PPP funds. We deployed over $140 million in PPP funds that supported somewhere around over 5,000 businesses. And what was very interesting about our engagement with PPP is that these loans were extremely small. The median loan size for Hope hovered around $14,000. So we're talking about a very small business, and it supported or created just under 18,000 jobs. So the impact was evident. And what I also will credit is our ability to use technology to streamline the access to the application. But that's also amidst the backdrop of many mainstream financial institutions turning away their own members or clients to Hope. So we have numerous stories of Black-owned businesses or women-owned businesses who went to a major financial institution, but their loans didn't get processed in time. And remember that PPP was first come, first served. So time was really of the essence if you were trying to access capital. But they got turned away and they got turned to Hope. And so we did experience deep success with the PPP program, but it was primarily a function of our deep reach into the community with the brand awareness, people knowing that we were in the community to help them, and also having technology resources to help streamline that process.
And I know you too, Michelle, were involved in PPP. If you want to share a little bit about what it was like for you at that time, just a few years ago. Where was being an SBA lender something you were already doing?
At the time, it was not. We actually had to initiate that process all within a matter of days, actually. The fortunate thing was that the SBA lender here, or the liaison here in Birmingham, was a previous NCUA examiner who, we knew him, and we were able to, reach out to him, and he kind of walked us through the process. And so we were able to take advantage of that. We were approved, and as Kiad said, it was a lifeline for a lot of our members. Our church that we serve, we have a wide variety of people, business owners, and we were able to provide PPP loans. One of the stories that we had was a barber. We did a PPP loan for about $3,000 for him, and it wasn't significant, but it was something that helped him, make it through a difficult time when he couldn't, operate. So it was very successful for us as well, especially the second round when the requirements kind of changed. We have a lot of sole proprietors or individuals in business within our organization. And so it was very good for them, as well as the revenue that it produced for the credit union was very good for us as well.
Thank you. Courtney, I'd like to bring you in to ask you, because it's like I'm keeping an eye on the time. We are down to our last 5. But I know that you guys recently had some publications like Nonprofit Quarterly, and I think there's a question in the chat about data. So what are some other things that you guys have either been working on or published recently? I'm happy to, include future link to the people who are registered, to any research reports or anything. So.
Yeah, so we actually recently submitted a public comment in response to the Department of Treasury on the development of a national strategy related to financial inclusion. And so we weighed in heavily on that to share, some of the challenges that are specific to Deep South borrowers and some of the solutions that we've already mentioned, for example, that are crucial to really bring people into the fold. And, we've also done work around predatory lending. We've done a report on Memphis specifically that looked at predatory lending and found that it was more prominent in low income and Black and Hispanic neighborhoods in the city. And so, we've just done research and written blogs on, various parts of the experiences that our members face, and just kind of bringing that to light and adding the data to really bring true the lived experiences that they feel.
Thank you. And you guys hosted a really good event. I know at least twice. We had somebody who was able to attend in person, but then you had a hybrid format recently. So what are those roundtables that you guys are hosting periodically?
Those are the economic mobility forums in which we will convene local community stakeholders and regional national partners that are interested in increasing, again, financial inclusion for the regions that we serve. We host those, seems to be every year now, and really want to shed a light on the contemporary challenges and solutions to community economic development and financial inclusion for historically marginalized communities in the Deep South. So the last 2 focused on defending financial democracy. That was last fall, and earlier last year, we focused on increasing the social capital and networking for, again, communities to better leverage their ability to be, or rather decrease the racial wealth gap.
I thought it was so good. It was well done. Kudos, hats off. Particularly when you had people talking about things like, and it's a top of mind for a lot of our regulators and stuff about like, what is that type of bias?
Appraisal bias?
Appraisal bias and things like that that affect Black homeowners. So many issues, too much to cover, but thank you guys for being part of this today and being part of our Black History Month webinar, but also all the great work that you're both doing. And I'm sure that people will probably want to join your mailing list and stay tuned for any future webinars and reports that you guys produce, any sign-on letters. I'm sure our community would be happy to support you guys. But thank you for being with us today, and I'll just wrap this up.
Thank you so much.
Thank you.
Thank
Good
you.
afternoon. Bye.